Welcome back. I'm Tiffany Meyer. Just days away from high import tariffs kicking in, President Trump and Ursula von der Leyen, the president of the European Commission, announced the two sides have reached a deal. Trump says the deal imposes a 15% tariff on most European goods to the U.S., lower than the threatened 30% rate. Trump also said that the 27-member bloc will purchase $750 billion worth of U.S. energy and invest an additional $600 billion worth of investments into the U.S. above current levels. Joining us now to unpack what all this means, especially what it means for the U.S. consumer, are two guests. Thomas Aiello, Senior Director of Government Affairs at National Taxpayers Union, and economist Paul Mueller with the American Institute for Economic Research. Thank you both so much for joining us. Now, Paul, starting with you, what are your thoughts on this EU deal, especially considering Trump was saying ahead of the talks there was a 50% chance there would be a deal?
Well, I think this is certainly better news than imposing the 30% tariffs. The 50% tariffs are going to be better for European exporters. It's going to be better for people in the U.S. who are buying European goods. It's what Trump wants. He wants to have higher tariffs on goods coming in from around the world. And perhaps more importantly is the concessions he's able to get from the European Union in terms of being more open to U.S. goods entering their market, that if he can get some of the non-monetary barriers to get removed, that would be a big plus for business in the U.S.
And on that note, Thomas, now that a deal has been announced, what can the U.S. consumer expect to see as a result, especially from the European auto industry?
Yeah, well, it's great news that a deal was reached. We really needed to reach a deal before Friday because the most important trading relationship in the world is the EU and the US. About $1.7 trillion traverses each side of the Atlantic in a given year. So I think what consumers can expect is certainty. It's very good that we have a deal because the alternative would have been really unacceptable. So we'll have to see what the details of the deal are. Right now, we know the top lines, but there are a lot of questions as well. So we'll have to wait for the details before we can truly know what this means for the American consumer.
And Paul, as we wait for more details to come out, von der Leyen had said the U.S. and EU combined have the world's largest trade volume, encompassing hundreds of millions of people and trillions of dollars. Given that, just how important is this deal that it was reached?
It's a huge deal, right? It's much more important than, say, a deal with Indonesia or even a deal with just the UK by itself. The European Union, though it's not as big as it used to be from an economic standpoint, it's still an enormous part of the global economy. And they've long been major trading partners with the U.S. So this is a big one because, again, it represents not a single country, but 27 different countries. And so this is going to be good in terms of promoting stability. That's one of the challenges with Trump's approach here to tariffs has been there's been a lot of unpredictability, uncertainty. So they can nail this deal down and get the details clear. That's going to be good for markets.
And Paul, staying with you real quick, what stood out to you the most? Of course, it's still broad line right now, but we know the 15% tariffs, billions in energy investment, and that additional $600 billion investments in the U.S.
That's right. I think, it's hard to know with the large numbers on investment, how much is additional investment, how much investment was going to happen. Some of these are commitments that may or may not come through. So it's a little bit hard to read on the investment side. On the whole, the Trump administration has been making a very favorable regime here for foreign investment. So I would expect that we're going to see large investments from Europe. I think the takeaway, though, is even though the tariff rate, the top line rate of 15% is lower than Trump had threatened, I think it's worth remembering that it's much higher than tariffs were a year ago. So at the end of the day, we're going to be seeing higher tariffs on European goods coming to the U.S. The president is excited about that. I think economists have more reservations, but we'll have to see how it plays out.
And Thomas, on that note, Ireland's prime minister said that the agreement, quote, brings clarity and predictability to the trading relationship between the EU and the U.S., adding, while the tariffs does mean it'll be more expensive in terms of trade, the agreement, quote, creates a new era of stability. Well, that's, Ireland's take. What about here at home? How are businesses, small businesses especially, and U.S. taxpayers likely to be impacted?
So I think what we've heard most from small businesses over the past year is they need certainty if they want to make investments into their business and determine pricing. We saw this with the One Big Beautiful Bill, with a lot of the expiring tax provisions. With that settled, a lot of the conversation for small businesses has turned, what is my tax rate going to be on tariffs? What does it mean 1 month down the road, 2 months, and the rest of the year? There's been a whipsawing on Main Street about how much should they stockpile over the course of the year. Now, this 15% tax rate, it's good. It's not great. As Paul mentioned, this is much higher than when President Trump took office. So in some cases, it is a missed opportunity. Now, we have to remember tariffs are taxes. So all of this is going to be either levied on the importer who will have to eat the cost of the tariffs or passed along to consumers. Now, it takes about 6 to 12 months for consumers to feel the full cost of the tariff. So we'll have to see how that plays out in the inflation data. And then with the Fed meeting this week, I don't know how they're going to respond to this, but at least there is clarity and certainty about the tax rate of 15% on imports.
And Thomas, staying with you very quickly, we have seen so far most importers have been eating those tariff rates. It hasn't really been passed down to the consumer in most areas, at least. How do you see that playing out going forward, especially as we wait for some more trade deals, China coming up? But also, how do you see, President Trump's main goal of bringing back manufacturing to lower those prices?
President Trump is 100% right that we should and can produce more in the United States. I just don't think tariffs are an effective way to get there because you're taxing American businesses and consumers. What is a more reasonable way to approach that is one, a deregulatory efforts. He's a deregulation president. I think we'll see that with permitting and then other onerous restrictions on American manufacturing, tax certainty, which I talked about earlier. We now have the most pro-growth tax code in a generation. That's great news for businesses that want to expand or start. And then 3, American energy dominance. For manufacturing centers, one of the most expensive input costs is electricity. So the more we can drill, produce baseload power, I think the better it'll be for American businesses to produce here and then ultimately export their goods and services abroad.
And Paul, looking ahead, the big news markets are watching for are the talks with China, where Treasury Secretary Scott Bessent will meet his Chinese counterpart in Sweden Monday. Now, reports saying the two sides are likely to extend the tariff pause, meaning no deal, but also no massive tariffs kicking in. What are you expecting out of these talks?
Well, I think every time President Trump gets a trade deal done, I think it strengthens his hand as more people come to the table. And so this EU deal is actually going to be a good touch point, I think, going into China, where China doesn't want to be the country that's left out that does not have a deal worked out with the U.S. China is also, in many ways, the most complicated trading partner because so many different kinds of goods are traded, because they have so many business practices that harm U.S. businesses in terms of taking intellectual property. Obviously, there's some adversarial elements with the CCP and sort of China's play for global dominance. So it's a very kind of tricky deal to work out, and both sides are not going to want to give a lot. But again, I think this EU deal strengthens Trump's hand, and as he can get other deals done, he's got better bargaining and leverage power. And I think this pause here is probably just letting them sort of play this out a little bit further, and I think that's going to be good for the U.S. in the long run.
And Thomas, what are you watching out for in these talks in Sweden?
Hopefully we can come to agreement. It looks like they're going to be extending the talks, and the tariff won't kick in until August 12th is what we're seeing and hearing. So hopefully that remains the case as well. I don't think we want to go back to the Liberation Day tariff rate of 145% on imports, and then China imposing 125% tariff on American goods. That's another equally important trading relationship. It's important that we have low tariffs, low non-tariff barriers. So that's what I'm looking out for. I'm hopeful they'll reach a deal. But as Paul mentioned, as more and more countries come to deals with the United States, hopefully it does strengthen our hand and we can get the best possible deal for America.
Definitely a lot to watch for here. Thomas Aiello, Paul Mueller, thank you both so much for joining us.
My pleasure. Thanks.